everyone, K-Team here with the Traders Club, TwoTradersClub.com. Thank you for tuning in to another episode of the market update. Again, I'm your host, and today we're going to talk about S&P 500, Spider, and the Russell 2000 ETF, IWM, and then we'll go into some of my current positions, which I've been blogging about, Apple, Intel, eBay, and Boston Scientific. I'll give you updates on those. I want to talk about Treasury bond, oil, and then we'll talk about gold and silver and the miners here. And then I'll end the video with the energy sector, XLE, which I may talk about. I may think about getting into a position, probably not this month, maybe next month or so. And we'll talk about that. Hope you guys had a good week trading. Market is closed on the 16th of Monday, observing Martin Luther King Jr. Day. So you have a great three-day, not holiday, but three-day weekend. So we'll have a long holiday, and so have plenty of time to look over the stocks and things like that. So anyway, so let's get into it here. Looking at Spider, last Friday we talked about that rising 20 EMA, and we talked about as long as we see that the price stays above this rising 20 EMA, benefit of the Dow goes to the buyers. Even yesterday we saw initial flush. I mean, it looked like this was going to continue higher, and then it gapped down in the morning yesterday, and then we saw very, very bearish action. And that really made the bears really excited, calling for the double top. And then what happened was that this gap right here that was initially open, that gap got filled, which is a level that is coinciding with the 20 MA. So short-term buyers, short-term dip buyers came in and really bought that dip, brought the price back up. Really, after I think first hour or so, price was pretty much stayed. It was pretty much above the 20 MA the whole time, and then until close, buyers able to bring it back up here. And then obviously today we had a slight gap. This gap is still open as of today. Let me mark that so we know that this gap is open right there. So, and obviously right now, as I record this video, this is kind of a noontime, lunchtime. So we're seeing some weakness there. But I'll say this, in the minor term perspective, as long as we stay above the 20, I think 50 MA is around in this vicinity, 222. But as long as we stay above 20 MA, as long as the 20 MA rise higher, benefit of the Dow continues to go to the buyers. Even if we see a big sell-up, we must see, what the bears want to see, the bears at least want to see price closing below the 20 MA. But you know what, last time, back in December 30th, we did see price closing below the 20 MA, but this really trapped a lot of short-term bears there as the price got back up here. So I think, I want to put in 50 MA. I wonder if the 50 MA was no, it wasn't the 50 MA. It's just kind of a random level. Actually, I thought maybe there was a 50 MA here, but there wasn't 50 MA. Just pretty much random level that this wasn't even a recent resistance either. So I think a lot of this is kind of how the market works. I think a lot of short-term bears were looking for a target price about 221 for their short, right? Because there's a 50 MAs rising there, and this is all old resistance, possibly becoming new support. And then what happens is this market just, and then it loses 50 MA or 20 MA initially right here, and then we just get this kind of peculiar. I didn't even thought that was, I didn't expect that. I really didn't even expect such certain gap up there. And then we just gapped up, continued higher. Probably a lot of bears and shorts have to cover in that vicinity. So I think this market, that's how this market works. And something I talked about was, I think a lot of people, most people missed out on this move. And those people who missed out on this move, they're probably looking for, I think around this vicinity, like in 218 to at least 220, so maybe this gap. And they're probably thinking if the market pulls back to that level, they're probably thinking, I'm going to buy that dip. I don't want to buy it up here. They want to wait until this gets to about 220. And if we do get to 220, I'll buy that dip. 220, 218, even down to 217. All these levels, really good level to buying that dip. I don't see, the market going the worst case scenario, going any lower than probably 216, 217. In any of those levels, we'll probably see that will be a huge buying opportunity. But the thing about it is, I think because most people are looking for that, market tends to know what majority of people are thinking, and it usually doesn't give them what they want. And I think that's why it has been so adamant about this bullish move here. And so we saw that fake out here, and obviously you can see this support was lost, and then we held for a little bit, and looks like it was a follow through on this day, December 30th, below the 20 MA. And then we just got right back up here in the 20 MA active support here, and the 20 MA active support for 2 times already. So, and then with this gap is open. So I will say this, as of today, I think if gap remains open, I think we're gonna stay positive. We're gonna probably close positive towards the end of the day. If you're a buyer here short term, you probably do want to see this gap not getting filled and stay open today, and then possibly Tuesday we may see a follow through to the upside. Possibly this will be the first level of resistance at 227-ish. That's probably where we're seeing that lunchtime sellers coming in, and then next level resistance will be about 227.80-ish, 228 is that vicinity. So I don't see Spider making a big move at this point. I think there will be a lot of grindy work, meaning it's going to be a lot of, like this grinding type of move. I think as long as we stay above 20 MA, we keep this gap open, I think that's kind of what we're going to see going into next week. I think mainly because the Russell 2000 have been kind of in this channeling type of action there. I remember I did write about right there. So I just want to go back, talk about this. This was back in late December. I talked about how small caps showing stretched weakness, and we're showing at the time we're still showing this bearish divergence there, but we had talked about that 20 MA could be acting as support there. So going back to it, 20 MA has been still acting as support. You can see if I zoom in here, that 20 MA continues to act as what we got slightly below it, but we were dealing with a rising 20 MA. I think what the bears want to see, maybe price getting below it and then re-hitting it and then continuing to trade to the downside as the 20 EMA starts to act as resistance. 20 EMA still acting as support as of today. Obviously we are still working with the bearish divergence right there. However, it is starting to, the price really didn't move to the downside. It has been moving sideways, as you can see, and that really it's starting to nullify that bearish divergence. I mean, obviously it's still in the picture. Obviously, when I posted this, I mean, now what happened was RSI came down again. The MACD has came down. Stochastic is kind of starting to do something like this. So, but the presence of those bearish divergence is still there. Obviously, MACD is still kind of giving us that, the bearish type of sentiment there on the MACD, not on the price action, on the MACD. Obviously, RSI has been trying to find some support or trying to kind of hold this level while the stochastic has trying to possibly move back up, but it has already came down a lot while the price action moved sideways. So I would conclude that as long as we stay like this above the 20 MA, and because the Russell has been kind of lagging here, that could slow down Spider as well. So I think because Spider is trading at a pivotal kind of a resistance that we printed back in December 13th, I think we're not going to see a huge move, but then really grinding work because of the fact that, obviously the financials also were dealing with extended sessions. Russell 2000 with that bearish divergence in picture, though it is starting to get nullified, but the pressure is still there. The fear, the nervousness is still there on the Russell 2000. I think because of that, the Spider hasn't able to, even though we saw a good bounce here, it hasn't able to really thrust higher like we've seen. Like we said, a little pullback and we thrust it higher again. That's why I don't think we saw that another thrust, but instead we are kind of moving sideways here because of the financial sector, the banks, working with extended sessions and this, Russell 2000 with the bearish divergence on the price action and just really grindy work that it just kind of, this makes a lot of investors and traders a little bit nervous, especially in the short term, because when the market starts to grind, like especially in this is actually more of a bullish sentiment. When you, let's say, this is more like a bull flagging pattern for individual stocks, but when the indices starts to flag like that, sometimes it could just lose to the downside. It could just break to the, it's just really, at this point I really don't know. It's just a 50-50. Can it break to the downside? Can it break to the upside? And usually bull flag is known as a bull flag, known as a consolidation, a resting pattern before continuing to the upside. But I was trying to look for an example, but I couldn't find any. Well, you could kind of look at this as a flag, right? And then it really didn't break out to the upside. It kind of continued lower. You know what I mean? So that's kind of, it's not, this actually looked a little bit more bearish though, but kind of an example there. That looked like a bull flag that really never resulted to the upside. It actually resulted to the downside before finally getting up here. So I think there are a lot of kind of this nervousness in the short term. Obviously, big picture, primary term, intermediate term, it looks bullish. It looks bullish for all 2017. But looking at more of a minor term and short term, I think this price action is making short-term buyers nervous, and with that bearish divergence in the picture, because it could very well just lose the downside, possibly come and fill this gap. So I think with that, at this point, the direction, obviously the sentiment of the market is bullish, but we're dealing with extended sessions and the nervousness. So I think Spider could grind higher above the 20 MA. I think really there's a Russell is going to be key. If the Russell start breaking down below this level, I think then Spider will break below. We'll start to see weakness on the Spider also. But if the Russell starts to nullify that daily divergence and then starts to make higher highs and higher lows, then very well we could see all the indices starts to climb higher. Even if Russell nullifies that bearish divergence and continues to move higher, I don't see a huge move like this, but really like a grinding move. But again, sentiment is bullish, so let's go with that. And then let's look at let's see what happens next week, and then we'll kind of revisit these datas next Friday. Let's get into some of my positions here. Apple, I'm still holding positions. Call position Apple. First enter long back here, I think on this vicinity here, and then I closed out 50% of that position, and then I entered again, adding to the current position. I'm currently holding full position that I entered back here, and then half of what here, and this was all documented on my blog. If you want to check that out, and I've been, you know, on a constant basis, it's been blogging about it, updating the charts and things. But right now, we are dealing with this resistance right here from back in November 20th, and I think, and we've been kind of, looks like possibly a bull pennant type of pattern. And if we break out of that, I think 120 is possible. My target is 123. It used to be 120. I thought we could go higher, but the earnings is, I think, towards the end of this month. If we don't see a big, you know, like a strong bullish move, I may close half of my my current holding positions around 120.71 at the gap fill. But if we see a strong bullish move, there's a good chance I think we may get up to about 123, even right here that there's a gap fill at 124.50. But Apple looks great long term, but in the short term, some of these resistance is what it's dealing with here. Let's go to Intel. Intel, again, 20 MA, we're holding above 20 MA. We did have this bull flag. You see how this bull flagging is trying to resolve to the upside here. We are staying, I mean, the 20 MA has been acting as support 1, 2, 3, 4, 5, 6, 7, 8, 9 days, and we're staying above it. So I think if we can get able to get above 36.95, I think then there's a good chance we'll get to 37.27, and then filling this entire gap at 37.87. I'm still holding full call positions since I bought this dip at about 33.55, which I wrote a blog about. Let's go to eBay. Again, the 20 MA. The 20 MA has been a great source of support for the buyers here. We came down, 20 MA active support, 20 MA active support, and currently 20 MA acting as support. We got higher lows, higher highs. Minor to intermediate term is we are cultivating an uptrend. Benefit of the Dow still goes to buyers. However, we do have like a micro term, you know, like short term indecision with a lot of these sort of gap of volatility we're seeing here. But I think in the long term, I think we do, my target is about 32.52. Make sure to check earnings. I think earnings coming up soon here. If eBay doesn't get here before earnings, I'm going to hold through the earnings, my full call positions that I enter back 27.50-ish. If we are able to get to 30, 40-ish, then I'll be closing half there. But hey, eBay looks good here, intermediate term wise. We got good trend going on. Let's see if we can able to continue higher next week. Let's look at Boston Scientific. Boston Scientific continues to move higher. I entered calls around 2050-ish. I held through it. This was a level that I saw that this is a good level for a bounce in that vicinity here. We bounced, and then 20 MA is right. You see how 20 MA was acting as a resistance for quite some time, and then something changed right here once we started to use 20 MA support. It really thrived, and once we cleared this resistance, this is a high, this is a lower high. We cleared there was a really buyers came in, and really this was like a 6% gain there, big volume coming in. We threw a bull flagging pattern. We continue higher. I updated my blog on this day. I'm gonna hold my full positions, and then my next target is around it's about here. 24.26 is 24.26-ish, 24.47, which is probably Tuesday or so. If we get there, I am going to close probably half of my call positions that I enter around 2050-ish. And then I think earnings coming up soon too, though. I don't know exact day, but I'll hold through the earnings, half of my remainder call positions, and then maybe I'll post another update on my blog or another follow-up blog to talk about the next target after we reach my first target there. So those are some of the positions. Apple, Intel, eBay, Boston, they're all doing great, I think, and I think they're gonna do well next week. I want to look at Treasury bonds here. Treasury bonds, you can see we're back above 20 MA. But I'm still, I want to put this here. So I tweeted out that I'll be going long if it gets to about 115-ish. Obviously we bounced at 116.96-ish, but we have met with this resistance right. Really, we feel that gap, and that there was a gap here, and then we fill that gap. We saw bearish engulfing candle right there, and then we gap down, but that 20 MA is currently acting as support. I mean, if this thing continues to ride the 20 MA, I think there's maybe a good chance that we get up to 127. And if that's the case, I'll let it go. But let's say if this thing falls below the 20 MA and then gets another low, around 115 is where I going to go long with calls. But currently though, obviously, the sentiment, the overall sentiment of 20-year Treasury bond is bearish. We're still, after selling off from, how much sell-off was that? That was, oh, that wasn't much though. It seemed like it was about 18%, not a lot, 18%. But I think generally, Treasury bonds gets about that much of a pullback. This one's 22, this one's 15, this one's currently 18%. You know, as you can see, this one was, oh, this one's quite a bit, 27. So we get like 27, 18, 22, 16. So I'm just trying to get rid of these. So we have about 18% decline. See if we can get to 115 for my entry. If not, then I think there's a good chance we can possibly get up to 126. We'll see how it plays out there. Let's go to oil. Oil is dealing with, obviously, still in a downtrend, right? I mean, I know there's a lot of people who are calling bottom on oil here. This is double bottom, and this thing. This is how this market traps anyway. You can see it gets slightly above it, and then we really don't see a traction of higher lows and higher highs. What it does is it like traps all these buyers in that vicinity, and it just tanks. It just tanks. We get another higher, lower high, and tanks again. So, I mean, if you're day trading this, that's cool. If you're just trading a couple days, that's fine. But if you're looking at this kind of long-term investment idea, we're still in a downtrend. I mean, for oil to really reverse, like completely, at least I want to see this thing doing something like that. At least I want to see these lows are taken out or reclaimed by the bulls first. At least, hey, what if we can do something like that, and then, you know what I mean? Then we have in the process with higher lows and higher highs. Where will be a good entry? Well, I still wouldn't go, even if this thing goes, I mean, again, I'm talking about long-term trading. Even if this goes up here, I wouldn't want to go long there. Even if this thing comes down, I wouldn't want to go long here. I would probably want to go long 935 after it goes up and pulls back. Because we have, the reason why is because when that happens, we have a completely nullified this sentiment of downtrend. We're no longer cultivating lower highs, right? These are lower high. We got the high, lower high, right? So just, you know, people will be watching this, you know, like this. Oh my God, they be, a lot of times they'll be like that. Okay, we clear the resistance here, so let's go long here, right? This thing has bottomed. No, sometimes just because it clears the downtrend resistance doesn't mean it's bottomed. So very well it's going to, you know, form another resistance. Many times that's what it does. It just keeps on making new resistance or downtrend resistance. So really, for it to really reverse, nobody knows. If anybody come on TV and say oil has bottomed, we don't know. Nobody knows. When they do get it right, they're probably just guessing it at that point. I wouldn't want to see this thing nullifying this downtrend and start cultivating and these higher lows, higher highs before I'm thinking about for long-term reversal. But I will stay away on oil. I mean, if you want to look at more of a short-term perspective, it's just playing a lot of mind games here. It looks like, you see, this is how this why anybody want to trade these? I hate breakout plays. Looks like, okay, people will be like, that's the resistance, that's the breakout, and then gets trapped. And then the same thing happens here. Okay, that's the resistance. This time for sure, this is gonna be a breakout play. We gap up, but it hangs, and then now we're trading back below 20 MA. I mean, even downside, people will be like, okay, this thing is ready to plunge. I broke below this support, and then you threw a hammer, and then it goes right back up. I mean, it plays mind games all day long, upside and downside. Do you see this? So these breakout plays are just so stupid. I don't know why, if anybody wanna play these breakout games. I don't play breakout, plus especially when in this thing, when the oil has been in this tankage mode for, you know, years. Let's go to miners here, and gold and silver. We'll look at XLE. We'll end the video. Miners, we're still in a downtrend, that's for sure, right? We understand that looking at a big picture, we are still bound by this resistance. That's a strong resistance. This was strong resistance here, strong resistance there back in 2012, and this was strong resistance back in, you know, August of 2016. And so big primary term, we're still in a downtrend. Looking at more of an intermediate term, we're still in a downtrend with the lower highs and lower lows. We're trying to get up here, and we're possibly forming some kind of a bull pennant pattern. If we can break out, I think there's a good chance that there will be a gap right there. So there's a good chance that we come and fill this gap at 24.79 if we break out of this bull pennant type of pattern. It looks like minor term bull pennant pattern there, staying above the 20 MA, possibly. But if you want to trade this more of a longer term, you know, maybe some kind of an inverted head and shoulder is maybe what you're looking for. But then again, that falling resistance, that really, really strong resistance coming down around that vicinity. So I really don't want to look at this a long-term investment idea until this thing nullifies this falling resistance, and then possibly getting back above 28.69. That's when I will start looking, not saying that I'm going to go long there, start looking. So overall sentiment is bearish on GDX, on the miners, and but if you know, for it to really turn things around, you probably want to see something like that. Currently, we're bound by this resistance right here in that vicinity at 23.11. If we lose that, there's a good chance. There's a gap right here. $20.24. So if we lose it, we'll probably come back down and fill that gap, and then there's another gap. So if we lose that level, we'll probably come back down to about 1930. A lot of times when a gap gets filled, it could be acting as a kind of a short-term support. You can see this right there. This was the gap area, and then it did become as a short-term support there. You see that gap was filled. It did act as kind of a short-term support. This was a gap here that did act as short-term support. So these are much bigger gaps, though. These are very tiny gaps, so I don't see it as acting as a like strong support, but at least in a short term. So that's kind of what we're dealing with here on GDX. So let's get gold. Gold, obviously, I don't know what happened to my... We're still in a primary term downtrend. We've been talking about this downtrend resistance for quite some time now. As long as we're below that level, the primary term trend and the sentiment is bearish. Obviously, after throwing this head and shoulder formation, left shoulder, head, right shoulder, this thing has plunged. We have lower highs and lower lows. The problem about it is, it's tough to say that this has bottomed because we're still in the vicinity of lower high. I mean, who knows how long it's going to go higher before it plunges again and creates another low, right? So if you want to see this thing possibly nullifying this head and shoulder formation, what I would want to see is possibly this thing gets all the way back up and then maybe hit this the falling resistance, pull back, and then creates a higher low, and then we form this inverted head and shoulders, and then it gets well above this falling resistance about 125. This will be, I think, then possibly I'll look into potentially looking at things more of a longer term. But that hasn't happened, obviously. So I'm just giving you a possible scenario. I think there's so many people are looking for gold to bottom. There's so many people. I mean, I don't know why gold has always been a big topic for people. It's very difficult to trade when, especially gold, that is just it's pretty volatile. And I think people like it, a lot of gap ups and gap downs, but we're still in a downtrend in a big picture. We may have something going on here, but really though, these are some of the levels to watch in a big picture. I personally wouldn't want to go long the way I traded until this thing gets well above 130. So what I would do for me, and it's not too late, it's not too late to wait until it fully confirms, and then go long, because once the gold starts to cultivate an uptrend, it can last you for a while. Why trying to pick bottom here? You know what I mean? It's very, very difficult when you're dealing with the long-term downtrend here. So obviously the minor term we did see some move, but that's kind of what it does. That it comes down, we get that initial move, and then we come down again. We get the initial move, and then come down again. Buyers who really say this will be going all the way up and then doing something like that. But tough to say as of today. So we'll maybe look at it next time, see how it progressed. But currently we are dealing with this horizontal resistance right here. Old support, potentially becoming a new resistance. So if we lose that level, continue lower, we do have a gap here and there. So that might be some of the levels to look at if it continues lower. Let's look at silver. Similar story in silver. We're bound by this falling resistance. That's a very strong resistance. And we got lower highs, right? And lower lows. What does that mean? We're still in a downtrend. So we get these initial moves, but it's tough to say it has bottomed. Again, if this thing wants to reverse back up, you would want to see something like that: left shoulder head, right shoulder, and then getting above 1785. Then perhaps we can get to about 1942. However, if this thing gets up, maybe there's a way that we threw a little bit of smaller head and shoulders, something like this, and then get up to maybe target to about 1731 on silver. But if this thing falls, then we do have a gap right here, and that's a pretty sizable gap, and there's a chance that it could come and fill that gap, and probably once that gap gets filled, it may act as some short-term support. That's kind of what it does. You see that this gap was filled, and then we saw the initial bounce. So that's kind of what we're dealing with here. So again, if you're looking at gold and silver as a long-term investment idea, not right now, not yet. I mean, how many people do you think thought that this was bottom and start accumulating here, right? Start accumulating there for long term, and it has lost since the top about 20% already. So it's not too late to wait until full confirmation and then enjoy the ride when we have a full confirmation. It's not too late to start seeing something like this. I wouldn't mind, let's say this thing just moves straight up. I'm not saying that's what's gonna happen. I don't want to go long here. I'll wait for a pullback and retest at 1948, and I go long there. I'll go long there, and then in the process we have low, higher low, higher low, higher low, higher low, and then you're pretty sure at that point that we have good bullish establishment, uptrend establishment. At least inauguration of an uptrend. We don't have uptrend yet. We have downtrend. And a lot of people are probably thinking that this was an uptrend right here. Well, that was more of an intermediate term perspective. You see, that wasn't a primary term uptrend. So that's why you have to understand that you gotta look at a big picture. Until we start to, build uptrend like that, it's still not ready, and it's not too late to wait until we see the fully developing uptrend, and then go from there. Lastly, I'll let you guys go with this energy sector here. I've been watching energy sector for quite some time. XLE, since it has lost, it has came down. It pretty much crashed, but let's see. That's a crash. That's a 50%, almost 50% value that it lost. After seeing crash here, I've been watching it. Obviously, so this is the thing about it is I haven't entered yet because I want to look for a full confirmation. Obviously, good news is we've been cultivating lower highs and lower lows, and with the recent move, we've been cultivating higher lows and higher highs, right? So that's a good sign. So we are starting to cultivate an uptrend here. So we're no longer cultivating a downtrend. We are finally possibly have bottomed. So there's two things can happen where this thing could. I'm going to put in all my moving averages for this one. 100, 200, 50. This thing could possibly, find support at 50 MA and just continues higher. But when you're dealing with the bottoming process, a lot of times there's one more fake out. Could be I'm going to use this analogy. I'm going to use 2009. Obviously, this was after 2008 crash. XLE. I don't know how much it lost. Oops. Yeah, this was, this was about 58%, 59% decline. And then what happened was it's starting to look bullish. We even cleared this. This is why I hate breakout plays. I mean, I hate it. I don't ever do it anymore. I don't ever do breakout entries anymore. It's just because, look at this. This looked like on this day, just huge breakout. Everybody's watching this support or the resistance, and then everybody gets trapped and this thing gets dumped. And we get all the way below these moving averages. And then probably people went long, probably finally close it out, and then it reverses on them like this. This market is so good at that. Just faking everybody out and then leaving without them. So we really haven't seen that, that one last fake out. And I'm not saying it's gonna happen. It might not happen. It might not happen. I'm just, like even when we look at this one. This was 2011, before we saw, some move here. And this is a bit different. This is kind of a quick turnaround. But you can see this was a breakout, but it wasn't a V shape. It just went straight up, and then that one last plunge before this thing moved higher. And so we've been really grinding though. And you know what though? But it may continue higher that way. It may just continue to grind higher. That's a possibility. But for me, at least at this point, I want to see if there's a one last shakedown. And I'm not, again, if you're already long in this, I'm not trying to bring you down or anything like that. I wish, if you're already long in this, I wish it could continue higher. If it continues higher, I'm okay, because I'm already holding many positions, so I'd be fine with letting it go. I'll not chase it. I'll let it go. I'll just look for other setups. However, if this thing does come down to about 67, 63 and fill this gap and possibly retest at 200 SMA, I will be going long at about 67, 63, possibly 68, 43 if it comes down to that level. But let's say if it doesn't, we find support at 50 MA, which currently we're slowing down there. We're kind of sandwiched between 50 and 20. The 20 MA is acting as resistance. 50 MA is acting as support. If this thing continues higher, then I let it go. I won't be entering my position. I think another level would be, as a strong support, will be right here. That gap, I think possibly we, come to the 100 SMA, fill that gap. There might be initial bounce. Let's say if this thing continues lower, fill that gap back up, maybe hit this resistance, and then finally come down to about 67, 63. That's the level that I personally will be going long. But again, that doesn't mean that's what's going to happen. And I'm not, hey, if you're long in this, I wish it could continue higher. I really do. I'm not, rooting it to come down. But in the event that this thing does come down in that vicinity, that's the level that I will be going long on that. So that's everything. So obviously the best way to connect with me, as always, is go to my blog here, twotradersclub.com. You can put your email there. You can get all my videos like this one, or every article, so you'll get an alert on your email inbox. That way you'll never miss those. I am going to be running just for this weekend, 15% on my Premier research plan. So it will expire on Monday late night. So you can go to, I will put a link below this video. You can just go to Premier 15 and you'll see a link there below this video. You can definitely take a look at that. If you need more information regarding this offer until Monday night, it will be, you can look at the link there and you can be able to see. And if you want to learn more about just doing more of a longer term trading, position trading, a long-term strategy, I've been putting in a lot of stocks that been there for more longer term. Like some of our stocks I'll be holding a couple years, some of the stocks maybe 3 to 5 years. Position trading, obviously, it's more like some of the trade that you saw, like my Spider trade that I done recently, my Apple trade. 3 to 6 months. That's my bread and butter kind of a position trading there. So if you want to see which other stocks that I'm currently involved in, and they definitely take advantage of that. Otherwise, I'll talk to you next Friday on the market update. Have a great weekend. Have a good long holiday weekend. It's again it's not holiday, but it's a Martin Luther King Jr. Observed Day. So market is closed on Monday, but I think most businesses are open. Probably like post office and banks are closed, and so have a long 3-day weekend. And I'll talk to you next week, next Friday, back on the market update video. Have a great weekend.